Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour With AI. Bitcoin has fractured below the critical $60,000 psychological barrier, triggering a liquidity crisis for its most vocal corporate advocate. MicroStrategy, now rebranded as Strategy, is staring down $14.46 billion in unrealized losses on its digital asset holdings. The market is now scrutinizing the hidden cost of this leverage. Analysts calculate that the firm's recent capital raises imposed a 48 basis point dilution on existing shareholders. This is not just a balance sheet issue. It is a governance crisis. Investors are now pricing in the risk of MSCI index exclusion if the company fails to stabilize its crypto exposure. The era of passive accumulation is over. Active risk management has begun. Meanwhile, Asian equities are reeling from a severe confidence shock. Japan's June quarter Tankan survey revealed a steep dip in business sentiment among large manufacturers. The Bank of Japan's own confidence index has collapsed under the weight of Middle East tensions. Supply chain fears are no longer theoretical. They are hitting the bottom line. The Nikkei 225 fell 4.2% as input costs surged across sectors. Corporate Japan is bracing for a prolonged period of volatility. The yen's weakness is no longer a monetary policy artifact. It is a geopolitical hedge. On the macro front, Beijing is playing a long game. China's post-war strategy in Iran is reshaping global energy geopolitics. Beijing is leveraging the US-Iran conflict to secure long-term oil access at discounted rates. This move eases domestic trade pressure while isolating Washington diplomatically. Shanghai markets are reacting to this volatility with cautious optimism. The pivot away from Western financial infrastructure is accelerating. Energy security is now national security. In related news, U.S. policy signals remain dangerously contradictory. The Trump administration issued a 60-day oil waiver for Iran, yet simultaneously froze $344 million in crypto assets tied to Tehran. This bifurcated approach creates arbitrage opportunities for sanctioned entities. Stablecoin risk is rising. The market is pricing in the likelihood of further regulatory fragmentation. Looking ahead to today's release, the absence of major economic data leaves the S&P 500 vulnerable to earnings-driven volatility. Goldman Sachs forecasts robust profit growth for Q2 2026, but the breadth of this rally is narrowing. The S&P 500's gains are being driven almost entirely by its top 10 contributors. Apple, Microsoft, and Nvidia are carrying the index. This concentration is a warning sign. If these tech giants falter, the broader market has no cushion. The market is betting on a narrow band of winners. That is a fragile foundation. Investors must watch the dilution metrics at Strategy and the Tankan revisions closely. Geopolitical risk is no longer a tail event. It is a central bank variable. The disconnect between oil waivers and crypto freezes highlights the complexity of modern sanctions. Markets are pricing in a world where energy and digital assets are battlegrounds. That's your market briefing. Follow Rumour With AI for daily market intelligence.